There are three companies that I'm extremely interested in going into November, especially if the opportunity presents itself. Now, earnings season is kicking off, and by the time you're watching this recording, some of these three companies might have already reported their results. And with the rapid development of artificial intelligence driving the larger macro thesis, as well as the combination of having certain market pullbacks due to Trump and Xi Jinping going back and forth around tariffs, I do believe that there might be some near term opportunities. Because if you look at the valuations of each of these three companies, all of them are trading at less than a one times PEG, which I believe, actually creates a potentially compelling story for us to explore. But as always, potential is a dangerous word. And this company is a company that has been caught up in the narrative that artificial intelligence is going to severely disrupt their business, and bigger companies are going to leverage AI and come in and eat its lunch. But I really do think that people are discounting the fact that all of this artificial intelligence that they're worried that is going to eat Duolingo's lunch also need to be trained on a certain data set, which is learning behavior, learning psychology, and the pattern of students over the past decades and more. And this information is specific to Duolingo, and it's not something that the AI can just go out and search on Google, which is why I don't believe it is going to be as easy as people claim it to be to use artificial intelligence to replicate Duolingo's platform. Can they use artificial intelligence to create a platform, to create games for people to learn? Yes, but can they replicate the same learning efficacy? That is something that I really have my doubts over until I see it for myself. Now, additionally, as I've mentioned previously, I think the mode for Duolingo is not the platform, but it's really in the way that they humanize learning for their users. Because you can see that the users themselves prove that they want the human aspect of the platform to stay by the boycott of the company that they did this year, right? When they felt that Duolingo was leaning too heavily into AI. And so, if you ask me, Duolingo is really not a platform company. They are an education company that leverages AI to begin getting into this space by teaching languages. Now, in more recent times, they have broadened their scope to start teaching things like mathematics as well as music. And they already have the blueprint to start to gamify the learning in the way that really hooks the users. Now, this doesn't mean, like I said, that there are no risks, right? We have seen with Perplexity's AI releasing its own AI language coach. Now, this is, as I was mentioning earlier, the example of AI being able to develop the platform, able to develop games for people to learn. What I'm waiting to see is how efficient is this AI at teaching people a language as well. So, like I said, it can replicate content, but what we need to pay attention to is how well all of these other AIs can really produce learning outcomes. You see, to me, the subscription to Duolingo makes this service very sticky for those that use it. And if you take a look at the numbers don't really exactly tell you the same story as the narratives that people are painting around the company. So I just want to be very clear, the service over here is education. It is not a platform, it is not a game, it is not translation. So every time people sell off this company because of some bigger company leveraging AI to do some sort of translation, I think it is really a huge misunderstanding of the value proposition of Duolingo. And I think it's with companies like this that you really, really have to take a look at the fundamentals as a benchmark for your understanding around the company rather than just blindly follow the narrative. So if you take a look with me in this graph over here, what you're going to see if you dive into the numbers is that a company that has been growing their revenues consistently over the past 5 years, putting up a CAGR of around 44.5% with gross margins consistently in the 70% range. Now, moving on from gross margins, if you just take a look at the operating leverage that this company has, it is not just the gross margins, because you can see that the operating leverage really start to scale over the last couple of quarters, with their operating income nearly 8xing since December of 2023 and currently operating at a 13.2% operating margin. So I think this is really, really impressive for a company that, people are worried that AI is eating away at their moats. But as you can see from the numbers, that doesn't really seem to be the case. And the main reason for me that makes me feel a lot more comfortable with perhaps opening this position, or at least taking a look at this company, is that despite the narrative around the company, what you are seeing in this graph over here is that the free cash flow has been steadily growing over the past 5 years. And they have done so because they have very good cost management. They are keeping capital expenditure low, and not just low, but consistently low during this period of time. And so what this means is right now, they not only have the ability, they also have the resources to build out their own AI capabilities to defend the moats that they have and to in fact even expand it further. Because again, I just want to say that the data needed to train this AI to build an educational platform is not generalized data that you can find on Google or research paper. This is years of real data collected by the humans using their platform, that they analyze their psychology and learning behavior and their interaction with the app. And all of this data is amalgamated onto Duolingo's platform. And that is how Duolingo can use this data to train their AI. And that is the advantage that I believe that they have. Therefore, I do feel like the market is misunderstanding this opportunity. I think some of the psychological hooks that they have used throughout their app, like the streak mechanics, really has started to drive up user engagement once again, because we have seen that play out on different apps like Snapchat, even TikTok in more recent years. And so they're using the same psychological hook, and it is working for Duolingo because users keep coming back and they're even paying money to keep their streaks going, which is how they can further monetize their platform. And so to me, I think user engagement, this high user engagement, has translated to the numbers that we have seen above. And if you look at their valuation on an EV to EBITDA basis, they are trading at around 138, which is rich because you can go and buy Shopify, which I would argue actually has a deeper moat than Duolingo. But if you account for growth, then you can see in the growth adjusted valuation, Duolingo is only trading at a 0.4 times PEG versus Shopify's 1.3 times PEG. And that is why this makes Duolingo an interesting business to keep an eye on. But one of the companies seen to be a potential competitor with Duolingo is none other than Google. Now, I've been holding this company since the $150 range, and for a long time, this company has also been considered one of the laggards in the AI industry. For a long time, just like Duolingo, the narrative around this company is that search is dead, but the numbers proved otherwise, and we are seeing this play out right now. Especially in the last couple of months, I think we have seen them execute at a pace that we haven't seen Google execute at for a very long time. And what we are seeing is that their Gemini platform is showing much better results than some of its competitors. And Google are once again, I believe, one of those companies, perhaps not in the most forefront, but one of those companies in the forefront of this AI race, and hopefully they can keep this up. And the reason why over the last couple of months, even though the narrative around Google has been fairly negative, I have managed to hold on to my shares is because if you take a look at some of the numbers that I'm going to show you later on, the narrative just doesn't make sense, because people are telling you that Google search is dead, but they're generating over $50 billion in revenue with a CAGR of 13.4%, which is keeping up with the growth of its total addressable market, right? The search market. And they're at a point of their business where they do not have to continue growing. They just have to defend their market share. And their numbers are showing us that is exactly what we are doing. And of course, you can see because of the nature of their business, there are certain cyclicality involved in terms of understanding their revenue. But by and large, you can see that their revenue is trending upwards. And this is not just driven by Google search, right? Google Cloud is growing over 30% year over year. They have grown revenues in this segment by over 5 to 6x in just the last 5 years. And I think to me, what is really exciting about this segment of their business is that while Google Cloud is generating $13.6 billion in revenue, it actually generates $2.8 billion in operating profit, which is a 20% margin. And we expect this to continue expanding over the next couple of years as adoption grows. I think with the recent AWS outage, right, that basically flooded the news, it shows the risk of centralizing a company's cloud infrastructure on just one platform. And thankfully for us, there are only three options to choose from. So for the companies that want to diversify away from AWS, they only have two choices, which is Google or Microsoft. And I think right now it might seem like Google could have the edge, especially if you play this out over the next 1 to 2 years, for the very simple reason that Google can more seamlessly integrate Gemini into their product offering compared to how easily Microsoft can integrate OpenAI into their product offering. And what you're seeing in this graph over here is the optionality that Google has in all other areas of their businesses, which is why they're able to keep reinvesting their profits into this AI build out. And I think when it comes to deploying artificial intelligence across all of their platforms. Google are doing a fairly good job with this. I think if you take a look at their integration of the AI overview into the search function, I think by doing so, they're really starting to wrestle back the narrative that search is dying. Because with this integrated AI function into search, the fact that I can search something now on Google and get the direct answer to the question rather than a list of results. That is exactly what the AI is supposed to do. But more than that, it can now also back it up with a link to a source that reduces the friction of having to search for the source through a whole list of articles. And so, of course, how can I forget, right, the release of Nano Banana, Google's image generation and editing model, which has really gone viral. And so, to me, if you think about all of this, they really are not laggards anymore, and they're starting to wrestle back the narrative over the businesses that they have. I think if you ask me which company is really lagging in the AI race at the moment, I think that title has to go with Apple, has to go to Apple, right? I think we have already heard the news about Google integrating Gemini in the classroom, helping teachers make lessons a lot more personalized and engaging for the students. And I think this is actually brilliant. I mean, I really haven't heard of this before reading the blog on Google, but they have this thing called Gems, which are custom versions of Gemini for students to interact with, which is what you're seeing over here, right? And I think this is fantastic because you can really make use of the AI in a particular way that helps a certain group of students. So, as a teacher previously, I know that this really helps students because you can cater the questions or the learning outcomes to the different levels of students that you have in your classroom. And apart from Google launching Gemini in the classroom, we are seeing Google launch Gemini Enterprise, which is aimed at their business customers. So, this is actually a B2B product where Google is actually focused on providing AI tools that can help a company build out their own agentic workforce. So, GEMs are basically, AI agents within the classroom that can help teachers reach different groups of students. And now they're taking it one step further into the business world by empowering other businesses to create their own agentic workforce to serve different customer bases. So it's not just small businesses and startups that are working with Google to actually build out their entire agentic workforce. We saw back in September of this year that Google announced their agent payments protocol, and this is titled AP2. And this is basically an open protocol, and they developed this in partnership with some of the leading payment providers in the world today. So some of their partners that they have when they were developing this payment protocol are partners like Amex, Adyen, Ant Group, Coinbase, PayPal, and even Revolut, just to name some of the more popular partners. And so, what we are seeing really from Google is a continuous ramp of AI into every single platform that they have and into every single sector of the industry. And I think this is really epitomized by the partnership that we are seeing between NVIDIA and Google that they have announced earlier on in this year, where both of these companies are partnering in order to help the US advance in robotics, in drug discovery, as well as even optimizing the energy grid. And I think really in order for Google to keep up with the demand of artificial intelligence, they have heavily invested into the AI infrastructure build out as they aim to satisfy this demand. So back in July of this year, during their last earnings call, actually Google told us that they have raised their projected capital expenditure this year up from $75 billion earlier on in the year to now $85 billion. And I think it's interesting to see whether or not they're going to increase this number again in Q3. So when you take a look at the revenue numbers for Google, they have been growing steadily over the last 5 years, while they are able to maintain gross margins in the 50% range fairly comfortably, despite scaling the business. And I think similarly, we are seeing net income increase in the right direction, up and to the right as well. But I think what really, really gives them the ability to continue to build out their whole entire AI infrastructure is their free cash flow. Now, if you look at the graph, it may seem a little bit concerning because this has been declining over the last couple of quarters, but you can actually see if you compare it throughout all the hyperscalers, this is a trend across all of them as they build out their AI infrastructure. But what this really, really shows you is that Google still have room to continue expanding their spending, continue to expand their spending. That sounds a bit weird. Continue to increase their spending because at one point, Google were generating over $20 billion of free cash flow. So despite the increase in capex recently, they are still generating over $5 billion in free cash flow. And not just that, if you look at the amount of cash that they have on the balance sheet, they have well over $95 billion of cash, which which puts them in a very strong position to continue investing into the AI infrastructure. Therefore, if you compare them with some other companies in the sector, what you would see is that they only have a projected revenue growth rate of around 11.7%. But with everything we have covered so far, I would expect to see this start to increase in the quarters ahead. And currently, Google is trading at a forward PE of 24 and trading at a zero point 0.6 times PEG. So that means, personally, for me, I'm not in a hurry to exit this position. In fact, I'm looking for opportunities that I could add through any form of weakness in the macro economy. Now, moving on from Google, the third company that I'm interested in is actually Meta. Now, Meta, if I actually do buy it in this upcoming month, it will be the first time I'm actually holding this position in my portfolio. This was actually a very close fight, this third place company between Meta and Amazon. I really like them both. But personally, for me, I think the deciding factor is that I don't really use Amazon that much in Singapore. I don't really watch Amazon Prime. It's mostly Netflix for me and the occasional Disney. Additionally, I don't really use the Amazon online stores unless the product I'm looking for, like the Vault X binders that I use to keep my Pokemon cards, is not available in Singapore, because otherwise in Singapore I generally end up using Shopee, right? And in terms of what I spend my time most on online, it's actually YouTube, which belongs to Google. And with the occasional Twitch stream, it's not that often that I watch Twitch. But I think because of my interaction with the various products, I do feel it's a lot easier for me to invest in Meta platforms. And it is one of the biggest moats that Meta platform actually has, right? The family of apps that they own. You can see around half the world population using their family of apps in one form or another. And the moment they roll out anything, they can immediately get it into the hands of half of the world's population. Now, in the recent Q2 earnings, this number, the number of people on their platform of daily active users, stood at around 3.48, nearly 3.5 billion daily active users. 3.4 daily active users is equivalent to the population of China, India, and the US combined, right? All of these countries using Meta every single day. And that gives you then an idea of the scale of their operations. Now, in Meta's recent earnings call, they actually spoke about Advantage Plus, and this is basically Meta's automation advertisement system. Now, it's not new, but they have integrated certain AI features to help boost its advertising business, and they are seeing, good adoption among their customer base. So, like I said, once again, because they already have so many people on the platform, it basically serves them on both ends, right? As they're rolling out features for the broader audience, the moment they roll out the features, they get it into the hands of half the world's population. But at the same time, because they have the attention of half the world's population, they can then sell all of this data to the advertisers as well. Now, personally, for me, I haven't been someone that has dug too deeply into Meta. So, coming into this month, this was something I spent a little bit more time on. And so over time, we have seen Meta introduce things like Threads to compete with X, and they've also started rolling out ads testing on the platform. So I guess over the coming quarters and months, we're going to see a little bit more significant revenue generation from Threads down the line. And they have also made many changes to WhatsApp. I'm not too familiar with every single one of the changes that they have made, but I do have to say that now it's really starting to feel like Telegram, because there was a period of time where I shifted my usage of the messaging apps and started to use Telegram a little bit more. But now I'm finding myself more in the balance. I'm just using whatever messaging platform that the group of friends that I'm talking to tends to use. And so as they continue to monetize WhatsApp, I think certain analysts out there are estimating that this can actually bring in an additional $10 billion of revenue over the course of the next few years. And of course, all of this monetization is so that they can continue the same thing as Google, their AI infrastructure build out. And you can see that it's the trend among all the hyperscalers, right? And they're doing this not by using debt, but they are doing this AI build out using their free cash flow. And they don't just want to integrate AI into the advertising side of the business, but they do hope to integrate this into the consumer facing side of the business, basically through their family of apps. But at the same time, therein lies the risk, because that is what everybody is trying to do. And the question is whether or not Meta can make an AI that is useful to consumers before companies like OpenAI, Apple, or Google integrate it deeper into their ecosystem. You see, Meta already have an audience, a ready-made audience that they can deliver a product to, that they can have fairly high confidence that it will be widely adopted. Now, if they can do that, then they can scale into a multi-trillion dollar business. Now, today, Meta Platforms market cap stands at around 1.6 to 1.7 trillion dollars, and I really wouldn't put it past them getting to 3 to 4 trillion dollars over the next decade. Now, in my recent trip to Canada, I actually saw the Meta glasses for the first time. I believe these were the same ones that was announced by Mark Zuckerberg recently, and this was basically something that was in collaboration with Ray-Ban. Now, I haven't seen it in Singapore, so it was quite interesting for me to actually use it over there in Canada. And I mean, of course, they tell us during the product presentation that the adoption has been good. When I tried it out at the store, it was a lot more user friendly than I thought it would be. However, to me, the way I think about it, if they really, really hope to break out from Apple's walled garden, then I think they do have to do a little bit better, because ultimately, in order for me to use the glasses, I still need to connect it to my phone, which is still the current problem that exists, right? It is definitely a step in the right direction, but I don't think it is going to become the next breakthrough anytime soon unless you can dislodge people from their phone. As long as people are still using their phones, then Apple at the moment is safe, despite, as I was saying earlier, to me, they are still kind of considered the laggards in the AI space. And so finally, we also saw Meta and CoreWeave announce a partnership where I believe they'll be paying CoreWeave up to $14 billion to make use of the infrastructure that CoreWeave has. Now, this is bullish for CoreWeave for sure. And what this means for Meta is that they are securing GPU capacity needed to continue to build out their AI models. I mean, the value from this deal, at least from my point of view, is that by leveraging on the infrastructure that CoreWeave has, it really helps to supplement what they have already built out for themselves, and it improves their scalability of their AI infrastructure. So, what you're seeing in this graph over here is really Meta Platforms financials. And over the past decade, right? This is just over the past decade from December 2010 all the way to today. You can see how much they have grown. But if we zoom into just the last 5 years, you can see that the CAGR of the business has slowed down from 36% to just 15.9% over the past 5 years. And I think that is largely down to the scale of the business. I think Meta Platform has really evolved into this behemoth of a company. And what is most impressive to me is that they have been able to maintain their gross profit margin well in the 80% range in all but 3 quarters since 2019. Unlike back in 2022, when Mark Zuckerberg was chasing after the metaverse and profitability took a hit, what we are seeing over here is that despite an increasing investment into the AI infrastructure build out, profitability is still increasing at a healthy pace, with net income profitability sitting in the 35 to 40% range. And I think more importantly, they are doing so while still being cash flow positive. You can see this blip in 2022 where they were overspending on the metaverse. You can see cash flow nearly turn negative, but that is not the case today. Now, the same trend that you're seeing in Google, you can see in Meta, where cash flows have been declining, in the last couple of quarters. But like I said, because they are still generating a strong amount of free cash flow, personally, to me, this is nothing to be worried about. So if you really compare Meta with some of the other hyperscalers, what you would realize is that they're trading at a forward PE of only 25 times, yet at the same time, their 3-year revenue CAGR is 16.5%, while trading at a 0.5 times PEG. And I think because of that, that makes Meta Platform an extremely interesting proposition, even with the amount of investment going into the AI infrastructure build out. So I do think we can expect the build out of this AI infrastructure to go on into 2026 as Meta Platforms and all of these other companies continue to pursue these opportunities. And as long as, at least in Meta Platforms' perspective, as long as they're able to use their family of apps to continue driving revenue and profitability, this is going to be a virtuous cycle that can keep on going for a while. Because of that, I'm not too worried by the amount of investments that are being made by these hyperscalers into the AI infrastructure build out. And I do think that if Meta Platforms can really launch an AI that is widely adopted, they already have half the world's population at the tip of their fingers. And because of that, this makes their business an interesting proposition should we get any near term pullbacks. And with that, I will see you in the next one.